morning and welcome to the India Development Debate Direct right here on ET Now. I'm Supriya Srinath. India's economic growth at 6.3% for the second quarter has raised many questions, whether it is a pause in the downward slip or a point for an upward swing. Should 6.3 be lauded at all, or does it prove that structural reforms will take a toll but are perhaps good in the long term? What are the tailwinds and what challenges could the Indian economy face from here on? How best to address the two big elephants in the room, exports and agriculture? Is the rupee too strong for comfort, and where do the growth numbers leave monetary policy action? Who better than two former RBI governors, Dr. Bimal Jalan and Dr. C. Rangarajan, right here on India Development Debate Direct in conversation with us on ET Now. Thank you very, very much, both of you, for being with us. It's rarely that we get the two of you together, and I hope to make the most of this. Dr. Rangarajan, let me begin with you. How do you rate 6.3% growth rate? Is it perhaps a pause in the downtrend or the upswing that one is going to see for the Indian economy from here on? As things stand, how are we going to reach 6.3%?
It's a welcome trend. I mean, after 4 quarters, we have seen quarter growth higher than the previous quarter. Therefore, it's an encouraging bit of information about the economy. Yes, it looks like that the recession or the decline in growth has bottomed out, and we can look forward to further rises in the growth rate in the coming quarters. But it is going to be a very much of an uphill task to get a growth rate of 7% plus in the coming quarters. It is to get an average of 6.5% for the year as a whole. We really need a growth rate much higher than even 7% in the next 2 quarters. That is going to be tough. But certainly it appears that the recovery in growth rate has started, and we can look forward to further increases in growth rate in the coming quarters.
So you spoke about an uphill task, you spoke about the challenges. What sort of challenges do you envisage in getting to the growth rate of 7% for this year, at least over the next 2 quarters, Dr. Rangarajan?
Well, the most important thing is that while the growth rate of 6.3% in GDP or 6.1% in GVA is encouraging, considering the performance in the previous 2 quarters, it is also very clear from the numbers that the gross fixed capital formation rate is continuing to go down. I mean, I think according to the latest numbers, I think the rate is the ratio is around a little over 36%. This is really the most disturbing thing. I think the challenge is really how to get private investment moving. Perhaps the ability of the government to increase its public expenditure in any very significant way in the coming 2 quarters is also limited. I think they have done their best in the first 2 quarters, and therefore the freedom available there is not very much there. Therefore, the crux of the problem is to how to get the private investment moving, and that is essential for sustaining a high growth rate over an extended period.
I'm tempted to jump to, private investment, and I just will, but let me get a quick opening remark from Dr. Jalan there. And Dr. Jalan, does 6.3% put us on course to achieving sustainable levels of 8-9% growth, or is 7 to 7.5% really the new normal?
I can't make out whether it's 7, 8, 7.3, 2 digits, 1 digit, but the point is whether it's a relatively high growth or not. And now, I mean, the fact that it has increased from 5.7 in the first quarter, am I right? It was 5.7 in the first quarter to 6.3. So we are seeing an uprise, and it is hoped. I mean, you give it about 6 months or so, and it is hoped that over a period of time after 17-18 and 18-19 that we will be able to reach about 7.5%. This is a very positive move, and in terms of ease of doing business and everything else, bank recapitalization and so on, I think we are making progress.
Okay, so you're not someone who wants to obsess over the last decimal point, and I appreciate that. But Dr. Rangarajan, you spoke about public sector expenditure and its scope of investing further being limited, and I think nobody will argue with you on that. But why is it that the government has been able to convince the Moody's for an upgrade, or for that matter, the World Bank believes we are an easier place to do business in, but has failed to convince Indian industry, the big stakeholders, as far as investing here is concerned? What is it that the government needs to do to convince industry to begin spending?
To some extent, perhaps, we have overbuilt capacities in the earlier years, looking at the rate at which we were growing at that time. But that excess capacity must be coming to an end very soon, and therefore the need for investment will be very much there. The question is that whether the corporates will be able to raise the necessary funds, raise enough capital to be able to push investment forward. That is where I think correcting the problems that lie in the banking area is extremely important. The proposal to recapitalize must be pursued vigorously so that banks which have become universal banks now, which provide both short-term and long-term credit, must be activated. Therefore, the solution to the NPA problem and the taking care of the recapitalization as early as possible is also necessary.
No, I appreciate the point that you're making on private investment. And Dr. Jalan, I'm going to just pick on the same thread with you, that Moody's is convinced, World Bank is convinced, but Indian industry doesn't seem to be putting money where its mouth is. They're not the ones who are investing. What will it take for them to invest? Because after all, there are limits to what the government can do. For how long can public sector investment be our engine of growth?
No, I think they've, from what I read, I mean, in that the private capital has already increased. I mean, in terms of investments, that we are seeing an uptick in the investment, which was compared with, say, the first quarter. So once the economy picks up and once the prospects are good, you would see the corporate investment rising. And after the bank capitalization, very high NPAs, and there was insolvency, bankruptcy code, etc., that has come. So my hope, I mean, this may be hope, but I'm not, I think not being very optimistic when I say that the worst is over now. And let us look ahead and see if India can achieve a rate of growth of 7.5% by 18-19. And I think it is possible.
No, we all hope, and we all keeping our fingers crossed for the worst to be over, Dr. Jalan. But let's talk about the big laggard, and that has to be agriculture. Growth at just 1.7%. Should that be ringing alarm bells at all, Dr. Jalan? And what needs to be done to address rural stress beyond the band-aid approach like a farm loan waiver or a soil test or a crop insurance? I mean, the rural economy is in distress. There's no denying that.
No, the most important thing is the availability of water and fertilizers and so on, and the spread of that to not only the semi-rural areas, but to the remote rural areas also, that we should accomplish that part. I mean, I don't know how far we have done that in terms of small farms, and the most important priority is to make sure that the small farms have access to what you might say the inputs that they require, and we have to concentrate on that part. It may take 2-3 years of time, but it's of utmost importance, particularly if the monsoon is good, if the rains are good, and let us hope that we recover the agricultural output also over a period of time. But you have raised a very important issue which requires attention.
Yeah, I mean, I don't think anybody will deny that this is a very important issue. I mean, the mainstay of a lot of our population is agriculture. But Dr. Rangarajan, I know you have a bit of a contrarian take on that. At 1.7% growth rate, does agriculture worry you? And what should the resolution to resolve the rural economy really be? There is this, we're doing as much as with our banks and industry and all of that, manufacturing. But what about India's farms?
I think the slowdown in agriculture should not be too much disturbing because last year was a year of high growth rate in agriculture. We normally do not get 2 years, successive years of very high growth rate in agriculture. Considering the fact that last year was a good year in agriculture, the extent of growth that we see now in this current year will only be around 2%. Even that is, in my opinion, a good growth rate. In fact, what has happened in agriculture last year is that it is a sudden increase in agricultural production, which led to a fall in the prices of agricultural commodities, affecting the total income of the farmers. And we had to think in terms of price support mechanisms because of the steep fall in prices arising out of a sudden increase in production. Therefore, the short-term problem is essentially one of relieving the distress of the farmers by giving them adequate income through price support mechanisms. But going ahead, of course, there are many issues relating to agriculture which need to be addressed. We will be able to get only a sustained rate of growth in agriculture of about 3 to 4%. I think that is what we really need to achieve.
Okay, so agriculture for you is not such a big concern. For Dr. Jalan it is, but let me address the other elephant in the room before I switch topics. And Dr. Rangarajan, it is an irony that Indian exports haven't picked up despite global growth rebounding. Yes, GST has been a big disruptor, a big shocker for exports, but what about exchange rates? I mean, rupee, perhaps many people believe, is way too strong. So given the GST shock and the strong rupee, how must exports wade through this crisis?
Well, the point is that if you looked at the data April-September, it looked very promising. Actually, the growth rate in April-September of Indian exports was fairly high. And the India's share in the world exports is coming down, but it is not really going down in a very significant way. I think the performance of the world trade has had an effect upon Indian exports. Particularly Indian exports, petroleum exports for example, have been affected because of the fall in oil prices. Therefore, going ahead, if perhaps the oil prices also go up, well, we import more than we export and therefore we will be a loser. But looking at the export side alone, you will find that there will be a pickup. As far as the exchange rate is concerned, all that one can say is that the real effective exchange rate should not be allowed to appreciate too much because the exchange rate today is influenced not only by the flow of goods and services but also of the flow of capital. Because of the net inflow of capital, the rupee remains slightly higher than what it should be. So we should take care of it. But I think more is what we do in order to maintain the competitiveness of Indian exports and looking at the geographical coverage of our exports to see that our exports are directed towards those countries whose income are rising.
No, there is a geography, specific strategy that even the minister is working upon, and I'm hoping it will be a success. But I just want to quickly spend some more time on exports, given its job potential, given the fact that it can be an engine of growth. And Dr. Jalan, Dr. Rangarajan is not overly worried about exports. He believes that the share may have not gone down; it just hasn't gone up. But what's your view? The global economy is surging, and our exports are not. We did well for I think 2 months, and then we got down. How much of a concern is that?
No, but you give it some time. GST, I mean, for example, everybody is saying at the moment that in terms of refund, there is delay. in export sector in terms of input, value added refund and so on. So I think the whole situation on GST, it would take about a few months to stabilize, and once we do it, and fortunately the government has been very responsive to suggestions being received from the corporate sector, and they would take measures to make it happen. So let us, I mean, as you can see, what I am saying is that our fundamentals are very strong, our export possibilities are high, and we have to make sure that the system, the administrative system in terms of refunds and in terms of complexity of the GST system, that is simplified. And I hope it will take, and the government is responsive to these suggestions, and I hope that this would happen over, say, next 3-4 months.
Okay, now let's switch gears and talk about the other big issue that I think people will want to know both your views on. Dr. Rangarajan, let me begin with you on this. The stringent norms in IBC, that's the Insolvency and Bankruptcy Code, the government is trying to obviously break down on the mountain of bad debt there is in the system, but many people believe that because it's so stringent going forward, there will be companies that will go into liquidation, there will perhaps be destruction of asset value. What do you believe? Do you believe that is what it may lead to, or do you believe this is simply a measure to resolve the big NPA and propel the economy? I mean, which of the two sides do you really agree with, Dr. Rangarajan?
I think the companies that one is talking about in terms of the which come under the regulation are already overstrained, and they are not the ones which are going to make the investment new investment. Therefore, I do not think that these regulations by themselves are going to constrain the behavior of investment. These companies are not the ones who are going to make the investment.
Dr. Jalan, what is your view on that? Do you believe there could be a significant amount of value destruction because of the very stringent norms where a lot of promoters may find it very difficult to come in and bid? Or do you believe this sort of a stringent norm, this sort of a very, very strict criteria was required to break down on bad debt, to ensure that there is real commitment, to ensure that no bad apples flow in with the good ones?
No, but there can be disruption in the economy. If, for example, what you are saying that there is a lot of closure of businesses and so on, but I hope that won't happen. In the sense that what is being done now is that to control the NPAs, insolvency, and that the government is taking measures, I mean, in consultation with what you might say RBI and other agencies, involved agencies, to try and see what can be done to make what you might say the policy front in the corporate sector also accountable in terms of investment, rather than just simply borrowing and using that for other purposes or buying firms, other companies and other firms and so on. So, I mean, let us see how it how it pans out, and I hope that we will be responsive to make sure that corporate investments are not hurt, and that those who don't have high NPAs and who have not undertaken what you might say the credit growth very lightly, that they would respond positively.
I think it's an important perspective that both of you are bringing to the table, that it must not hurt corporate India in the long term, because those are the ones who are going to create jobs. They are the ones who are going to invest. They are the ones who will lead to value creation. Nonetheless, I think the NPA mess needs to be cracked down upon, and perhaps the government has that in mind as they do it. Perhaps they need to have a more open approach to that. But Dr. Rangarajan, the other one big thing that one wants to discuss with you is the macro economy, and the macros as they are on the mend. There is one pocket of concern that may be building up, and that's crude oil, which has gone up by what, 23-24% in the last 3-4 months. Considering India imports so much of its oil requirement, where does rising crude really leave the fiscal space? I understand it may not derail the economy at about $60-65 a barrel, but do you believe it significantly shrinks the fiscal space, the fiscal freedom that we've enjoyed on account of low crude?
Well, the rise in the crude prices will affect us, but taking everything into account, I do not see the rise in oil prices, crude oil prices, being far too much in the coming year, because the oil producers also realize that any attempt to raise the price too much will also bring in other factors into operation, and it will not be sustainable. Therefore, there will be some increase in crude oil prices, but as I mentioned in relation to exports, we are also exporting oil products, and therefore we will gain by that. But on the whole, yes, it will affect particularly the fisc also, because the ability to raise domestic prices when oil prices, crude oil prices internationally rise up is very limited, because I don't think there is any tolerance for that in the country. Therefore, the fisc may be affected, but we will watch, and I think the rise is not going to be sudden. That's my view.
That's your view, but what is the view of Dr. Bimal Jalan as far as crude is concerned, given that's a big commodity that determines our fiscal space, that determines where the deficit could end up? What do you believe the little rise in crude that we have seen, and of course OPEC has now decided to prolong the cuts for a little more time, but what do you believe a rising crude oil will do? Because this government has been very lucky as far as the oil bonanza is concerned. It has given us the elbow room to spend, it has given it the elbow room to perhaps bring in and usher in more reforms without worrying so much of subsidies. What do you believe rising crude could do?
No, I mean, I think that that all of us have to worry about crude prices. I mean, that part is correct, in the sense that prices of oil would increase, prices of, all the things which are dependent on imports, that would increase. But from our point of view, from this sort of macroeconomic overall point of view, we are in a position to handle it without any problem because of very high foreign exchange reserves, because of export growth. If export growth picks up, that this would not cause the kind of problem which is anticipated. But how far it will go, one doesn't know. And if the prices of oil rise further, for example, then the use of oil would definitely, in terms of the supply side of products which use oil, would certainly be affected adversely. So let us hope that there will be a balance also in the oil supply, oil exporting countries, to make sure that the total amount of investment based on oil doesn't decline.
Okay, what about the, I'm going to end this debate. I'm completely running out of time here, but let me begin two last questions with both of you. And Dr. Jalan, the three things that you would want the government to focus on to revive growth expeditiously.
Now, the most important part, which all of us should know, and the government also is very much aware of it, is implementation. Project completions on time. It is not only the launching of projects, but also trying and making sure that it is completed on time rather than delays. And the land acquisition, labor issues, etc., have to be sorted out before we say that we are increasing investment by 5% or 3% or 6%. That we have to sort out the problems on the ground. And I think that's a high priority. In terms of reforms, the government has done very well so far, in terms of reform in policy making. But now in implementation, we should concentrate. Administrative reforms, we have done ease of doing business, for example, but we should see even then how much is required to be done to acquire land for investment. And let us examine that part, what can be done, and different ministries involved should be accountable for performance rather than only announcing policies. As a citizen, this is what I feel we should concentrate on, implementation now.
Okay, talking about reforms, I think I'll give Dr. Rangarajan the last word on the show. And Dr. Rangarajan, given the uptick that one has finally seen in growth, despite the nature of reforms like the GST and demonetization that were very disruptive, should the government be emboldened by the fact that no matter what you do, eventually growth is going to come back on track? Or do you believe there is merit in the argument that some people are making? Was it really worth going through demonetization or hasten into the GST? Because you ended up losing about 2 quarters of growth for both these decisions.
I think it depends upon the nature of reforms that one is talking about. For example, reforms in the area of governance are extremely important. And I do not think that any attempt to bring about changes in the delivery system in our country and in the administrative system will anyway affect the adversely or disrupt the economy. So first, we should go ahead and complete the reforms that have been already initiated. I do hope that the glitches in the GST implementation are gotten over as quickly as possible. But reforms of the nature of in the area of administration, delivery system and all that will be welcome. And probably reforms in the labor market and all that will have to wait till we have achieved a higher growth and we are on a path of higher level of growth.
All right, so the reform initiative must continue unabashedly, even though growth may tinker down a little, but there is no way out of economic reforms. On that note, thank you very, very much, Dr. Bimal Jalan and Dr. Rangarajan, for taking time out and being with us a day after India reports 6.3% GDP growth. It's always a pleasure talking to two of the finest minds as far as Indian economy is concerned. Thanks very much for being with us on this leg of the India development debate. There's plenty more that's coming up right after this very, very short break. Stay with us.